Tesla recently charted its worst performance on Wall Street this year, and it has kept the stock market buzzing. Is this the season to hold on to those Tesla shares, or is it time to start selling as soon as possible? Join us as we explore Cathie Wood's latest take on Tesla and Tesla stock.
Their own technology and company is going in the future. They have artificial intelligence expertise. They're taking this seriously. They have good distribution, preferably global, not always. And then most important beyond that, they have proprietary data. And most of the companies you'll see in our portfolios have proprietary data that no one else has that they can use to help their customers. Twilio is another example, 1 trillion business consumer interactions every year and growing at an accelerated rate. They can help marketers and salespeople understand, hey, these were the interactions that caused movement towards your company or your product. That is very valuable information that nobody else has.
If you're a Tesla investor, then get ready. It's about to be a long and interesting ride for every Tesla shareholder. Tesla recently closed at $211.99 after posting its lowest quarterly earnings per share in 2 years at 66 cents, a figure that lagged consensus estimates by 10%. The decline shrunk Tesla's market cap from $808 billion down to $670 billion, a reduction of $138 billion in just 2 trading days. Likewise, Tesla's CEO Elon Musk's personal fortune, usually buoyed by his massive Tesla share inventory, took a $30 billion hit, following the drop in Tesla's valuation. However, in all of this, longtime Tesla investor Cathie Wood remains ever bullish on Tesla. Wood said prior to the call that she's even seen Elon Musk with his back against the wall before, and that he still triumphed then. So this won't be any different. But why has Cathie Wood said this? Let's find out.
Joining us now is ARK Invest Director of Investment Analysis and Institutional Strategies, Tasha Keeney. Tesla is the #1 holding in ARK's flagship innovation fund, making up about 10% of the portfolio. Tasha, welcome. So Tesla's been cutting prices, global deliveries, missed expectations, but I suspect you're going to tell me that this miss is okay. Is it because people thought it was going to be a lot worse?
Yeah, I think there's a couple things. So one, we're hearing that the Cybertruck, slated for the end of November. I think people are happy with that. Tesla has continued to make progress cutting the price to produce vehicles, of course, which is very important for future sustainable gross margins. Although, of course, margins this quarter were impacted by the price cuts. What we're focused on is the long term. So I'm really excited to hear about their progress towards a future robotaxi platform. Again, I think it'll be much more profitable than the electric vehicle business, and it'll totally change the business model. So I'm looking forward to hearing more about that.
I'm puzzled by that idea because if there's robo-taxis, I don't need to buy a car, right? And so I'm not sure how profitable that. How are you modeling that, and how soon do you need for it to arrive for it to make sense the way you're modeling it?
Yeah, so you may not need to buy a car. Basically, we think incremental car buyers might forgo that decision, especially if you're located in an urban area. But it'll be a fleet model. So Tesla already has this partnership and integration with Hertz. They talked a little about that in the letter. Some of the app integration that they're doing this quarter. But I think in the future, you could imagine that Hertz could be a potential company that maybe houses and maintains these vehicles for customers.
Cathie Wood, the CEO of ARK Invest, has for a long time been a strong supporter of Tesla. The investment expert has remained bullish on Tesla, even when other investors have lost faith. Cathie Wood believes that Tesla will revolutionize the auto industry, and this is so evident seeing that Tesla is still ARK's biggest holding. However, Wood's theory on Tesla and its potential bounce back may be tested sooner rather than later, especially after the automaker recorded lower than expected earnings. Will Cathie Wood maintain her bullishness on this EV maker, or are things about to take a drastic turn? Let's find out. Hey guys, welcome back to Tesla Tomorrow. Just days after Wood doubled down on her support for Tesla, Musk hosted a less than buoyant Q3 earnings call, during which he issued warnings about the state of the economy and the costs facing consumers. The earnings call, which was expected to hold a lot of groundbreaking updates on Tesla's upcoming projects apparently revealed way less information than was anticipated, and this has created a buzz in the stock market after Tesla stock reacted negatively to the result of this event. So could Cathie Wood's prediction about Tesla stock still hold true? Is there still some sort of growth to be expected from Tesla? Keep watching as we seek out the answers to these critical questions. But before we continue, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Cathie Wood believes that Tesla is on a path to enormous success, and that this will significantly affect the company's stock price. According to Wood, there are several factors that could make Tesla go up in the future, like the automaker's expansion plan in areas like robotics, AI, and energy. The Tesla investor believes that deflation will soon hit the market, and this is going to be a great tool for companies like Tesla, as it will create room for innovation. Wood noted that other automakers are likely to struggle following the creative destruction caused by deflation. These are companies that are running their shares in the short term, with less investment in innovation, as well as automakers with products that can become obsolete. According to Cathie Wood, these companies will have to share these commodities at a discounted price or risk incurring a massive loss. But this will probably not be the case for Tesla. Tesla is a highly innovative company, which is what particularly sets it apart from other automakers in the industry. According to recent news, Tesla's Cybertruck will equip an 800-volt architecture when it begins delivery soon, and that will enable fast charging and better margins for Tesla, as it's going to reduce the cost and weight of the battery pack. Similarly, according to Elon Musk, the Cybertruck recently underwent a bulletproof testing with a Tommy gun. A video shared by Musk on X shows the Cybertruck's windows and body resisting the bullets fired by the machine. These updates could positively affect Tesla's stock price, as it could boost its competitive advantage and profitability in the electric truck market, and it could also demonstrate the durability and innovation of the Cybertruck and generate more hyper demand for the vehicle. Although Tesla is currently viewed as the biggest EV manufacturer globally, it is important to note that Tesla's EVs are still growing. The automaker is planning to update the whole interior of its cars to make them more modern and simplistic, since that is where the owner spends the most of their time. Tesla is also planning to manufacture more cars. The automaker has delivered 1 million vehicles to customers across Europe, a milestone that has been achieved 14 years after Tesla delivered the first Roadster. Tesla also launched FSD beta version 10.3 to more customers, expanding the number of testers from 2,000 to 10,000. And the FSD beta allows Tesla vehicles to navigate city streets, make turns, and handle complex traffic situations without the need for human intervention. In the long run, this could positively affect Tesla's stock price, as it could reflect its strong growth and market share in the European region, which is one of the largest and fastest growing markets for EVs. It could also showcase Tesla's leadership and innovation in autonomous driving technology and increase the value proposition of its vehicles. Tesla is also making significant progress with its battery and solar business, and according to Cathie Wood, that business will make Tesla a $1 trillion company in the next 5 to 10 years. EVs are an environmentally friendly system. A significant draw of electric vehicles is the ability to limit environmental impact while driving. Therefore, if the electricity that is consumed by a vehicle is produced by nuclear, hydro, solar, or a wind source, then the vehicle actually emits no pollutants, which is often the opposite for fossil fuel powered electricity sources. Tesla has also recently revealed the approval from the Chinese government to produce lithium iron phosphate batteries at its Gigafactory Shanghai. And you know what that means for the automaker. LFP batteries are cheaper and safer than nickel-based batteries that Tesla currently uses in some of its vehicles. These batteries have a longer lifespan and are currently suitable for places like the Chinese market, where battery swapping is popular. If Tesla is able to efficiently produce LFP batteries, then this could lower the production costs and increase margins. And it could also improve Tesla's competitiveness and appeal in the world's largest electric vehicle market. Imagine how this will positively affect Tesla's stock price in the future. What do you think about Cathie Wood's latest comments on Tesla? Let us know down below. And don't forget to tell us what your valuation of Tesla is. And for more content just like this, go ahead and click on this next video on your screen. See you there.